What is going on, investors? Hopefully you guys are having a great week out there. It is time to talk about Affirm Holdings, ticker symbol AFRM. The company just reported their earnings, and we are going to get into them. We'll take a look at the revenues. We'll take a look at the guidance on that one. I think that is important. We'll talk about some interesting notes below the guidance that I went through when I was looking at these financials. We'll compare it to the most recent quarter as well. We'll get a little bit of quarter over quarter view, but also a broader view as well. And we'll get into the financials and see how interesting this company is. Now, in the after hours, during the regular session, this stock was up 5%. In the after hours, we're up nearly 17.5% to nearly $109 per share. That has put this stock way up here. It had a big, gigantic move after announcing a partnership with Amazon, which we'll talk about here in a second. And now it has made another gigantic move. The stock was at 75 just a few days ago, literally, and now we're up to $108. We'll talk about what that means from a technical perspective as well. We'll talk about the most recent quarter here as well. I'll talk about this guidance and those types of things. What I want to do is back you up a little bit and talk about some broader things with Affirm before we get into the most recent numbers. Now, Affirm, like I said, back on August 30th, which is like literally 10 days ago, their shares of Affirm rocketed 46% following the Amazon payment deal. So Affirm signed this deal with Amazon that allows consumers to buy anything on Amazon, or not anything at this current time, but it eventually potentially anything over $50 on Amazon, you can do a buy now payment on using Affirm. Now, the first thing to understand is maybe some of you don't use Amazon maybe as much as I do, or as much as your friends do. Amazon already had a buy now pay later option if you use their branded credit card. So there's that. The other thing to understand is Affirm's deal with Amazon is not exclusive. So that likely means, in my opinion, more buy now pay later services will be coming to Amazon, and Affirm will be a choice that you have among others. So that will be interesting once that materializes. Now, I thought this was interesting as well. A third of U.S. consumers, that's 33%, fall behind on buy now pay later purchases. This is according to Reuters. Now, what they found is the vast majority, or the large percentage of people that fall behind on these payments tend to be Gen Z or millennial, which tends to be younger people. Gen Xers and baby boomers are far less likely to fall behind on their payments. And we'll see if this is a trend as Gen Z and millennials hit their stride in terms of financial independence. Will they just use their credit as something flimsy? My guess is not. It's just a younger age thing. And certainly if you're Affirm, you're attracting these customers as they are younger. You take a little bit of a credit risk there. And then when they are older and they have the money that Gen Xers and baby boomers have, hopefully they make on-time payments as well. I'm sure Affirm is baking that into their fees and revenue model. Now, the buy now, pay later space is super hot. Okay, we saw that Square did, I think it was like a $20 billion deal with an Australian buy now, pay later. PayPal acquired Japan's Payday for $2.7 billion this week in the buy now, pay later business. So Affirm is in this space, and it is super hot. And this is one way to play it if you want to get exposure to this type of credit risk. Now, what I want to talk about also is the guidance. And so they gave us fiscal Q1 guidance. That's the upcoming quarter. They also gave us fiscal year 2022 guidance, which is the entire next 12 months, because Affirm just ended their most fiscal year 2021. They are now on fiscal 2022, if that makes any sense. We got GMV, which is gross merchandise volume. This is the total amount of money that flows to Affirm. Now, obviously, Affirm is collecting payments for Peloton bikes or a pair of sneakers or something like that. So they don't keep the vast majority of this money. In fact, their revenue here, it looks to be about 10% of whatever the gross merchandise volume is. So they did between $2.42 billion to $2.52 billion. This is projected for the upcoming quarter. That is on GMV. Now, what I wanted to show you is for the last 3 months, we've had $2.5 billion worth of GMV. So essentially, Affirm is guiding to potentially a down to slightly flat quarter over quarter. But from a fiscal year perspective, they're factoring in GMV to be between 12.45 and 12.75. That is way above where we were for the last year. We were sitting at right about $8.3 billion in terms of merchandise volume. Now, what I want to point out is they make a note here that none of these estimates above include any partnership with Amazon. And so if the Amazon, it's currently in its testing phase, if that goes well and Amazon rolls this out and rolls it out very quickly, which is Amazon's typically their MO, when they roll things out, they get aggressive and they roll that stuff out. And so none of these guidance up here in terms of GMV or revenue is factoring that in. They also expect moderation of GMV related to Peloton as their products have kind of seasoned in the marketplace to a certain degree. It also doesn't have anything to do with the forthcoming rollout of the Affirm debit card, which in my opinion is a highly competitive product. There's lots of products out there. Will it be used by some of Affirm's customer base already? Yes, but I think the fact that this guidance does not include anything from Amazon is interesting. If that partnership goes really, really well, this guidance is way, way under what Affirm could potentially do. Now, the other thing we see here is revenue. So the next quarter is expected to become 240 to 250 in terms of revenue. And we see in the most recent quarter, they did 261. So they're actually guiding to a solid revenue decline quarter over quarter. We're going to go from 261 to 250, maybe even give them credit for a little bit of growth, 250, maybe even all the way up to 260. That would still be a decline quarter over quarter. So I thought that was interesting as well over at Affirm. Now, the last thing I want to do is take a look at the financials. From a balance sheet perspective, this is a company that you'd expect where it expected to be just being recently public. When we go over to the stock chart, we can only zoom back to January on this one. This one has only been public since the beginning of the year. So as you expect, the balance sheet looks nice. They've got plenty of cash. They don't have a lot of liabilities in terms of non-paying loans and those types of things. Now, from the revenue perspective, they came in at that $260 million worth of revenue. Last year, we're sitting right at $153 million. For the year ended, we finished with $870 million worth of revenue. Again, and I showed you that they're expecting way more revenue next year, up to $1.2 billion on the high end. But again, I talked about how that doesn't include anything included with Amazon. So even if Amazon's even a marginal success, they will blow this revenue out of the water. So they're projecting $1.2 billion on the high end. We sat at $870 million worth of revenue in the most recent quarter. Now, the other thing that I want to talk about is all that is exactly what the company wants you to see. They want you to see projections. They want you to see GMV and all that type of things. What they don't want you to necessarily see is the fact that the losses are starting to mount up on this business, and this business is not at all profitable, at least from the current time. We've got loan and purchases commitments basically flat, showing a relatively steady demand. Provision for credit losses. So they're getting to add some of this back in. Last year, they were sitting at, most companies, all the big banks were setting aside huge amounts of money. That has kind of leveled off, and it looks like it's far lower year over year. So that is good. That is showing that these loans, although you have a third of consumers not paying on those, the consumers that are paying basically make up for those losses. You got funding costs as well, doubled. We've got processing fees. Those went up just marginally, probably in relation to what our revenue went up. We've got technology and data analytics, sales and marketing went up huge. Look at this. They spent a $5 million, and then they spent $63 million. And take a look at general and administrative. When you're a company and you just go public, you have to hire a lot of back office staff, secretaries, CPAs, lawyers, those types of things. You went from 31 all the way up to 137. That's 137 million. You guessed it. That's like a fourfold increase, nearly fivefold. And so on our total operating expenses, last year we were sitting at 114. We were actually profitable from an operating perspective, because take a look. This is last year on a quarterly quarterly basis, we had $153 million worth of revenue. We only had $114 million worth of cost. That gave us $40 million profit. That's super solid. Now that's got blown up a little bit as you have competition in this space. You've got PayPal, you got Square that's starting to fund up these companies, and you got all kinds of offerings out there. Well, it's getting harder and harder, and Affirm is forcing to spend up, especially on the marketing side and the general administrative side, to compete with these companies. This quarter, we had that 261 in revenue. Our total operating expenses came in at 386. You guessed it, this company lost mucho dollars, $124 million. Now, for the full year, similar story being painted. We had $870 million worth of revenues, $1.2 billion worth of cost. That gave us operating profit, in this case, operating loss of $380 million. So you're going to want to factor that in, the fact that this company has a $24 billion valuation. This is likely not including the 18.5% rise in the after-hour shares. This thing's worth way over $25 billion in terms of market cap. And this is a company that, based on this guidance, minus Amazon, is likely not going to make any money. In fact, they have the adjusted operating loss here at $68 million in the next quarter, and it's $145 for the full year. And again, that's an adjusted loss. So they're actually going to lose even more money that from a GAAP accounting rules perspective. I think if you're going to bet on Affirm, you've got to, one, expect this Amazon deal to be fantastic. Maybe this debit card really takes hold. Peloton has a little bit better year than expected, and it could be that the fact that PayPal is acquiring these companies and Square, that maybe some of that acquisition and the seamless nature of that isn't seamless, and they kind of screw up, and it allows Affirm to capture a lot of business. That would be the absolute fantastic bull case scenario. And I tell you what, from a price perspective, this thing has rocketed, and we're way up here. I actually drew a long line here. I'll drop that down to about $109 per share. That's where this stock is right now. Like a lot of IPO stocks, it goes public at a certain price. It looks like about $90 per share, rocketed all the way up to $147, and then came all the way down to $47. That's why you don't necessarily want to be. In fact, I never buy IPO companies. I always wait for them to at least form this type of bottom that Affirm certainly looked like it wanted to make down here below $75 per share. And we've broken above it to up over 110 now. This thing is really moving in the after hours. I think what you're going to find with Affirm is the company is already valued very, very richly. Okay. Even if the rollout with Amazon goes very well and that is a profitable business for them, it is still very, very richly valued. And you also have some very well-funded competitors in this space, including the aforementioned Square and PayPal. So I wouldn't necessarily be in a hurry to jump out and get this one. I tell you what, a break above where it was at, down here at $90 per share, was extremely bullish. Now we're up here at 110. If you pull back to about $100 per share, that could be a buying opportunity. That has been an area of support. Again, we're not really, we don't have a lot of data to go on with these most recent IPO companies. The thing to also realize is we've created big old gaps in this price chart. So if the momentum gets negative on this one, you tend to want to fill those gaps. And that's why I'm seeing the stock at 110. Maybe it rallies in the coming days to 115, 120. I don't think I'd chase it there. I'd wait for some negative news cycle to come into these types of stocks. And you could come down here, and I think you're probably going to get a chance to get this at 100. If this news cycle stays negative, when we chop through just a little bit of price action, we could come all the way back down here, fill this gap, come all the way back down here into the $70 or $80 range. To me, that would make a lot of sense down here at $78, $80. I know that doesn't comfort you when the stock's at 110 and I'm saying, hey, I'd wait to 75, 80. You might think, well, I'm going to have to wait 2 years to get this. Well, sometimes that is the case with the stock market. And in the case of Affirm, if you want to buy this stock, this is a stock you want to buy. In my opinion, I'd be looking to make sure I have a portfolio with a little bit of PayPal in it. I'd also want Square. I'd probably wrap in a couple of the other payment processors, so like a Visa and a MasterCard, and I would maybe top that portfolio off with 2 traditional bank stocks, the 2 that I personally recommend. If you're going the individual stock route, you can always go the XLF ETF, which is a basket of bank stocks. But if you want to stick to individual banks, I would stick to the 2 largest, in my opinion, at least from the consumer side, and that is JP Morgan and Bank of America. In my opinion, a PayPal, a Square, a Visa, a MasterCard, a Bank of America, a JP Morgan, and if you want to sprinkle in a little bit of Affirm and maybe even a SoFi, which we covered here on the channel as well, I think that would be an interesting financial services portfolio that you could have. And I certainly would weight that heavier towards the big mega cap companies, and companies like Affirm, I would size accordingly because it's very, very richly valued. And there's a lot of unknowns here. The unknowns could shoot this stock much, much higher than it potentially is right now, especially because of this Amazon deal. But if that turns out to not be that big of a deal, well, the stock is probably overvalued in my opinion. That was Affirm Holdings. Hopefully you guys enjoyed this video. We'll be back again tomorrow with our Fang Stock recap show. Thanks for everybody for enjoying the channel. I appreciate you very much. Good luck with your investments.